one pocket which will be in activity during today and tomorrow's session, and that will be cement. The dispatch numbers will come out. More importantly, we talk about a space that has been resilient in the current downtrend of the markets, how the year ahead would look like, how the couple of quarters ahead would look like. And to do that, we've got two voices. One from the industry side, VM Mohan, CFO of India Cements, joins us on the show from Chennai, and Ravi Sodha, cement analyst at Elara Capital, joins us for giving us an analyst perspective. Gentlemen, thanks so much for joining in, and thanks so much for waiting by patiently as well. Mr. Mohan, come to you first. Let's just broadly talk about the uptrend in cement prices that we've seen. I believe they've shot up 10% since September. What do you think the trend looks like over the next 2 or 3 months?
Yeah, the increase that you have been indicating about 10% is in other regions, as you said. South has been fairly steady for nearly a year. We believe going forward the price could remain firm, and possibly we even think that we will be able to pass on whatever the cost increases. The only issue is a couple of new capacities are coming in, and these are from two established players, and we'll have to wait and see how they are going to play it out. And we believe with 95% of the capacity currently running, the prices are firm, and there is no doubt that it could continue in the months to come as well.
What about the demand in South? I mean, it has been weak due to the unrest in Telangana. Are you seeing any kind of revival there at this point?
Not yet, madam. In fact, first 6 months we continue to have a negative growth of over 4%. The only positive aspect is we are having, the base effect has substantially come down. We used to be actually, Andhra used to be consuming nearly 1.5 million tons a month. It has now come down to almost 1 million tons. So from here on, we believe it can only, the demand can grow. Possibly we are at the bottom. And also another factor is, traditionally if you see, 3 to 5 year moving average of demand growth is about 8 to 9%. And if you consider that, there is every possibility that you can see demand growing in possibly the next year.
The industry is facing cost escalation, of course, due to imported coking coal prices, and your import import majority of your coal requirement from Indonesia. Are you also feeling the pressure?
See, this particular October-December quarter is traditionally a monsoon quarter, as you know. Our main market is Tamil Nadu, and we get our monsoons in the northeast monsoon. So this quarter will always, the volume will be lesser. So we expect it to be lesser than what we did in the previous quarter. But we will be catching up with whatever is the shortfall in January-March quarter, which will be the busy quarter. So we may possibly end up the year with around 70% or so. While India Cements per se, we will be having utilization of about 68 to 70%. If you also consider our subsidiary, our growth in volume could be about 7 to 8% over the previous year.
All right. I believe Ravi Sodha is with us. Ravi, can you hear me?
Yeah.
All right, Ravi, great. Thanks so much for waiting by patiently. Ravi, give us a sense. You just heard the management of India Cements as well, talking about how the pricing scenario looks like. But broadly, in terms of your recommendations on the stocks, how do you see the quarters ahead to shape up? And in light of that, what do you expect the stock prices, how do you expect the stock prices to behave? Earnings, as well as how the cement prices would do, and thereby the impact on the stocks?
Well, basically, apart from South, in other region, we are entering into a seasonally strong quarters. So ideally, in second half, the volumes will be much higher as compared to that of first half. So apart from this, as you had said, the prices have moved up by about 10% in last 3 months. That is roughly 35 rupees per bag. So that should also result into a significant improvement in earnings in second half. Thirdly, the fact that the volumes will be very higher in second half will result into a lower fixed cost component, which should also to some extent stabilize the margins. And last but not least, there has been also softening in some kind of fuel prices. If you see the petroleum coke, one of the fuel that the cement players have been using, have started softening. Secondly, even the imported coal prices have softened, but unfortunately the rupee depreciation will take over majority of its impact.
Okay. So, Ravi, tell us, what do you think, what are your recommendations right now on the space? Because some of the larger ones, the larger stocks have kind of held out in the kind of cuts that we've seen for the market as a whole. But the mid-caps really haven't been able to perk up in trade. What do you do? What are your recommendations? One, on the likes of ACC, Ambuja. How do you see those stock prices performing? And two, in the mid-cap space, do you like anything? The likes of an India Cement or a Shree Cement or a Madras Cement. Do you like anything here?
Basically, in large cap, we are more positive on Ultratech and Grasim due to valuation comfort that we have in them. And in mid cap, as you have said, the valuations are much more comfortable. There are a couple of stocks that have been even trading below the Lehman crisis valuation. We have been pushing now aggressively JK Cement, which roughly is now available at $30 as compared to $40 in last Lehman crisis when it had occurred. So in mid cap, as of now, we like JK Cement and followed by Orient Paper, and in large cap we like Grasim and Ultratech. And as far as short term is concerned, well, we do expect that stocks could react positively, primarily because we are expecting this month volume numbers to be on YY basis to be in double digit due to lower base impact that will be there. That could have result into a positive sentiment for near term.
Right. Come to you, Mr. Mohan, and just want your comment really on the rupee's depreciation. You spoke about that hurting imports. Could you quantify the impact that it would have on your margins?
You see, in a year we are actually importing close to about 800,000 tons of coal. And you know what is the depreciation in the rupee in the last 3 months or so? It has gone down by about 4 to 5 rupees. You can, you have to just multiply, and annual impact will be 800,000 tons into 4 rupees, and it costs about $120 a ton. So that's going to be the impact for us. 800,000 tons, $120, and about 4 to 5 rupees, depending upon what is the depreciation in the rupee.
All right. On that note. Thanks so much, gentlemen, for joining us and giving us a sense of how the cement trends look like and giving us your recommendations as well, in this case, Elara Capital.